Today, we'll be digging into the Bitcoin chart, what is going on from a technical analysis point of view, as well as looking at some other macro indicators that can really help gain a better perspective on what exactly is going on in the crypto market. Because all these things require indicators, not just within the space, but outside of the space. So, for example, a lot of people that are specifically focused on the stock market disregard Bitcoin or disregard some of these macro indicators. And a lot of the people that are just into Bitcoin and the crypto market and decentralized finance disregard these other indicators. So I like to take the balanced perspective and really, do as Abraham Lincoln says, which is learn from everybody, even if it's what not to do. So kind of try and pick up these lessons of, okay, where people are flawed, where is the bias in whatever, group, whether you're in the Bitcoin group or the Tesla group or whatever group you're in, trying to find, okay, what's the bias here in working around that. So that's really the point of today's video, is digging into those things. And again, I'll be tying in how Biden's $6 trillion plan kind of plays into all of this, as well as some Ethereum charts. Very important to take a look at. But first off, just to kind of view, okay, what has been going on? Since this October 2020, really, we've kind of been taking up in this, really what turned out to be quite a parabola. And now we've retraced, right? So we've retraced further than 50% from our tops here. And that's what really panicked a lot of people. That's why there's been a lot of FUD. I stated, my opinion earlier was that we would be kind of in a symmetrical triangle looking pattern here for the next little bits, kind of moving sideways. We could definitely see lower lows. Maybe retesting this area is where I'm thinking about next if we break out of this triangle. So basically what we saw here, we can get rid of this Fibonacci retracement. We'll return to that. But what we saw here was just some rising wedges. So this was a massive rising wedge that was slowly consolidating, where we were seeing higher lows, but these highs just kind of kept up on this kind of this line here, and we dumped down here. Okay, so that was kind of this massive dump down. We consolidated in this ascending triangle and dumped down from there. And this dump down was that massive push down that scared out a lot of people, but it was a great opportunity for anyone who follows the channel, because we were able to get a nice average in position. And I personally have been averaging in this market for a long time, mainly around these levels. Like when Bitcoin was around 10,000, that was kind of when I was averaging in for a very long time in. But everything here is just good. As long as you have that macro trade right, you're pretty profitable, especially if you apply what I talked about in the global investment framework video, if you apply what I talked about in the how to pull profits with altcoin videos, which all of those are linked down below in the description in the must watch video section, where I talk about tiered investing, where I talk about the Trident approach. I talk about, identifying narrative in the market, forming a thesis, testing that thesis against an antithesis, so seeking out disconfirming evidence. And then from that, when you kind of contrast the thesis with the antithesis, you can find the synthesis. And that's basically the lesson you learned from testing that. And the synthesis becomes the new thesis. And it's kind of an ongoing cycle. But the point is, you can make a lot of profits if you are just kind of logical in this market when everyone else is emotional, when everyone else is freaking out in these market dumps, like when everyone, bought here and sold here. You want to be the person that you want to be the person that's been able to ride this wave out. If you understand what Ethereum is doing fundamentally, here, let's just go on the daily charts. We have a macro view here on Ethereum. You were the ones buying over here, ideally, right? So if you understand what Ethereum is doing, you can see that these are opportunities we have here, because right here, Ethereum was underpriced. Okay, so you understand what Ethereum is doing. In my opinion, we can see easily a $10,000 Ethereum this bull run. But there are other factors you have to take into account. If the stimulus cuts off, I think we could see markets have a little bit of, we could fall into a bit of a recession period with markets in the next year to 2 years. If we keep up the stimulus, well, we can prop up everything. Everything will be propped up. And that's where you use something like some indicators, like the US dollar index, for example. So the Dixie has really been going down ever since, we did kind of have this hike here, but if you look, okay, just what about, let's go to the beginning of the pandemic. Well, really, when was the beginning of the pandemic? Well, remember in 2020, let's go here, let's zoom way out. Sorry, I was a bit too zoomed in. So in 2020, it was around this time, if I remember correctly. So imagine that. Since then, the dollar has been in a quick decline, as you can see. So since these levels, the dollar has been in a quick decline. It's around this 90 level. We could even see lower lows, but generally, what does this mean? Well, the weaker the dollar, typically the stronger the stock market. Okay, and in this, typically the stronger the stock market, the stronger Bitcoin. Now, it's not perfectly correlated, but as capital flows in these markets, there are some general rules that you can look at for macro indicators like the dollar index. Now, what about crude oil, right? Okay, well, as crude oil increases, this is generally stock market positive. So what is generally stock market positive is generally Bitcoin positive, and Bitcoin positive is altcoin positive. So you see how these things kind of map together and how you can connect these. But the main thing when you're building a thesis, when you're building kind of an investment framework, is not relying on any one indicator. So not just relying on technical analysis, not just relying on things like fundamental analysis, not even just relying on sentimental analysis, but look at on-chain data. With Bitcoin, on-chain data is very important. I've made videos talking about things like Newpool, using different indicators like the stock to flow indicators. But again, using things like the 10-year yield is very, very important. Now, if you're confused on the 10-year yield, crude, and the dollar index, I have some videos in a playlist called Macro. So if you go to my channel and just click a playlist and then go to Macro, I talk about those things a bit more. Highly recommend that. And then if you have any questions, just let me know and I'll be happy to make a video on it. But I did want to tie this in with Biden. So what is going on here? Well, President Biden's $6 trillion budget bets on the power of government to propel workers, families, and businesses to new heights of prosperity in a rapidly changing economy by redistributing income and wealth from high earners and corporations to grow the middle class. The inaugural budget request of Mr. Biden's presidency reduces spending levels compared to last year, when lawmakers dispensed trillions of dollars to people, businesses, and local governments to help them survive the pandemic recession. But it sets a nation on a new and higher spending path, with total federal outlays rising to $8.2 trillion by 2031 and deficit running above $1.3 trillion throughout the next decade. So what this means is the spending represents an attempt to expand in size and scope the federal engagements in Americans' daily lives, including guaranteeing 2 years of pre-kindergarten and 2 years of free community college, reducing the cost of childcare, granting paid leave for workers, spending monthly government payments to parents, blah, 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 blah. So you see a lot of things here. What it comes down to is the money, the $6 trillion, guys. What you have to understand is this, so many people, I think just this doesn't even compute with them. A lot of people, this economic stuff just runs right through their head and they're not really connecting the dots here. There's no magic vault where they're just getting this trillions of dollars and, everything's just hunky-dory. It's not going to affect the long term. No. This has serious risk of long-term impacts on the U.S. dollar. And since the U.S. dollar is the global reserve currency, this has massive impact on the macroeconomy. I think, again, so many people are so confused by this. You have to obviously look at broad versus base money. If we're just increasing base money, it's a bit of a different aspect. I talk about that in a video called Yield Curve Control, broad versus base money, the Treasury and the Fed. But the main thing to keep in mind here, guys, is if he passes a $6 trillion bill, this could be one of the catalysts that sets Bitcoin on a new all-time highs, right? So we did kind of see this retracement, as I said. So let me just break this down. What I am kind of looking at in the medium short term is we could definitely see a breakdown out of this symmetrical triangle. So we could see some sort of price action that continues like this. So we're kind of in this area, maybe bounce down here, maybe even get a little bit of a fake out where people think they're going to do a massive trade, and then a breakout at least the size of this. So if you take the size of that, let me see if I can snag this. It's better just do it with a straight line. Here, let me just do this. Sorry about that. Let me just do this trend line, go from the base of this triangle, measure down. And this is just a general view, always with technical analysis. Remember that. So let's say we saw that breakdown here. I would be targeting somewhere in this range for a buy area where I would be averaging in a bit more. I talk about this in the Trident approach, which is, having stable coins. I've been averaging out and pulling profits throughout this area. I talk about this just like you want to average in, you want to be able to average out. Or sorry, I meant to say I've been averaging out throughout these areas. I average out a tiny bit around here. I average out a tiny bit around there. And then let's see, where was the last area? It was actually, I was a little bit scared that this was a bit of a top, which it was temporarily, but then I think in this area I sold a little bit more. And that's just kind of, when I say averaging out, it's of a lot of the positions that are kind of in the medium term portfolio. So in the Trident approach, I talk about having the kind of first prong as being the averaging in long-term holding portfolio. Second prong approach is kind of the swing trading, year to 6 month trading portfolio, and then the last approach, or the last prong in the Trident approach, is the stable coins. So stable coins are for things like this. It's for averaging in. And if we do have this fall, which we definitely could, it's definitely a non-zero chance. I mean, anyone who thinks, oh, this is the bottom, we've got this bottom, you got another thing coming. So we definitely could hit these areas. Now, if we break below this, that is where it gets a little bit concerning, which we could break below this. It's again, always a non-zero chance. Keep that in mind. So many people get so caught up in their emotions, their kind of ideologies in markets, and it's really a net negative when you do this. The more important thing is to go, okay, let's use indicators. Like, for example, let's use a nice little Fibonacci retracement that I had drawn out earlier. Let's use this and see, okay, what targets should we be, what areas should we be targeting? So let's say we fell down to these levels. Okay, so where would we want to be maybe pulling a bit of profits? Well, let's say we set our limit orders here. Well, maybe we could pull a little bit of profits here. Maybe we pull 20% of profits here, 30% of profits here, the other 50% here, and then wait for a little bit more of a pullback, because nothing goes up in a straight line. That's what, again, so many people get these things confused, and that's what really hurts you in the market. Depending on your skills, depending on how much time you spend in the markets, researching, learning, investing, and learning through trial and error, but also simulating other people's trial and error. As Warren Buffett says, everybody learns from mistakes, but it's a heck of a lot easier to learn from other people's mistakes. So instead of just only learning through trial and error, only learning through losing money, you can look at other people that have made bad trades and go, okay, let me simulate that experience and go, maybe I shouldn't do it that way. Maybe I should change up how I do things. And these are all things that are very, very important to understand. That's basically it for this video. Let me know in the comments if you have any questions. Maybe I will wrap it up with this, because I thought it was important to kind of show the other side of this argument. So we talked about what Biden is doing, but the White House disagrees and sees the budget as both for a collection of Mr. Biden's ambitious economic proposals for his first months in the White House and a repudiation of former President Donald Trump's policies. The budget puts forth by the previous administration push tax cuts, future spending reductions, and unfulfilled promises of sustained acceleration, economic growth, while Mr. Biden's inaugural budget envisions an era of federal taxation and spending previously unseen in the United States outside the periods of war or pandemic. So Mr. Trump sought to trim more than $1 trillion in federal spending on Medicaid and Obamacare, and rein in spending on Medicare. In contrast, Mr. Biden's budget proposes an additional $500 billion in spending for home health workers and federal subsidies for low and middle income Americans to buy health insurance. Mr. Biden would spend more than $2 trillion more on domestic discretionary programs like research and education than Mr. Trump's proposed in his final budget in office. So that's basically it for that article. I did want to show you this with Ethereum. Okay, macro trend, what's going on here? I have been averaging into Ethereum. I've helped some family members average into Ethereum, but just with Bitcoin, like I said, I think we will be consolidating the symmetrical triangle. The bias is towards the downside. So just with Bitcoin, as I said, it is a fairly high likelihood that we're going to be dumping down to these prices. So I would be setting limit orders there and kind of taking this into account, guys. You have to understand, again, it's like waves in the ocean. You can either get shreked by them, you can get absolutely destroyed by a wave while you're surfing, or you can understand how to surf. You can learn these different things, learn how to use stop losses, learn how to use limit orders, learn how to use a trailing stop loss and key indicators to help you really get a better decision. And, with Bitcoin, I have been averaging in here. I would potentially be doing a breakout trade if we get a confirmed breakout of this. So as I said earlier, let me go here. As I said earlier, what we could see is a fake out and then this dump down. But the other possibility is we could see a true breakout. We could see maybe a rejection here. Maybe we touch down to these levels here. If we break out, then go to retest here and we confirm this level, then we see a breakout here. That would be incredible. And that would be, this kind of upside trades. You would take, again, remember how we did this measure move price target towards the downside based on the base of the triangle. You could take that towards the upside. set up a little long position here. So this might be, sorry about that. That was extension. Let's go long position here. Boom, boom, long position. So if we did trade this breakout, what we would do is we'd set our stop loss real tight, even a bit tighter than that, to be honest. And then I would be pulling some profits around this area. And then this is probably the next target area I would be targeting. And you can use things like Fibonacci extensions to help inform your decisions. So, or Fibonacci retracements rather. And yeah, so I'd be pulling a bit of profits in this area, probably a bit of profits here. And then from here, if we are looking to new all-time highs, this is that area that I would be looking at is around 77,000. So that's basically all for this episode. If you enjoyed it, hit the like button, subscribe to the channel, hit the notification bell, join the Telegram group. Let me know in the comments what you want to see in videos moving forward. As always, invest global, and until next time.